Let's start with Amazon.
Yeah.
Profits are on the rise, and we have a chart here to show exactly how they're doing in terms of profits.
Wait, profits? We're talking about profits.
Well, that's
I don't want to go Allen Iverson on you, but we're talking about Amazon. We're talking about profits.
Fair enough. Don't bury the lead.
I mean, the fact that this company is turning a profit is really interesting in the way that they're doing it. Because this is a company that has famously avoided profits, right? They have taken every possible dime of profits and reinvested in the business. They haven't gone back to the capital markets. It's not one of those stories where they go back and try to sell more stock and don't actually ever show a profit. They've reinvested to make this business bigger and bigger.
Now this is jumping ahead. This is not Amazon. This is specifically their cloud segment. If we could put up the operating margins for Amazon overall, that would be interesting because we want to contrast these two.
So if you look at operating margins,
there we go.
As they're growing here. So this is their operating margin. This isn't the net margin, but it's the operating margins. This is the EBITDA, if you will.
So we're at 4.2%.
Not much.
Not much.
But what we see is a business that's clearly heading in a direction, right? The trend is their friend. They are starting to show some profits and eke out those profits. What's interesting is that the profits are coming not from the Amazon business of selling all the stuff that's always showing up on our doorstep. The profits are coming from Amazon Web Services.
And that's the other chart we just showed you, the AWS chart, which shows the profit margin on that.
So AWS was less than 10% of revenues, 9.5% of revenues in the last quarter, which is the most it's ever been. It's growing as a part of Amazon's overall growing business. But
here we
AWS
go.
margins of 25%.
25%.
Right.
Exactly.
So you've got AWS margins at 25% and rapidly increasing. I mean, 18 months ago they were 12.5%. So rapidly increasing margins for AWS, or cloud services business, which I think is the most important business in all of technology.
But you go from 12.5% to in the 20s. That we haven't seen a ton of growth in the last 3 quarters, though. So have you leveled out in terms of the operating income there for AWS?
It seems like it's growing. They seem to be now, as much as they're throwing money in, and there's a lot of big capex expenditure in AWS. We think they don't tell us how much is AWS and how much is the rest of their distribution business, which is also very expensive to build. But here's the last chart I want to get to because it's really important. So we saw that it is 10% of the business. We see the operating profits there. It is 10% of the overall top line business. It is 56% of their profits.
Right.
So AWS profits, although it's a small part of their overall business, as I said, 9.5%, it is most of the profits from this business.
And to make one further point, and it is growing overall very dramatically. So insofar as they can maintain anything close to the same profit margin when you're adding a lot of revenue, that's pretty extraordinary.
Yeah, and so if you think about it, the way that Amazon's business works is to sell products at a low cost and get them to people quickly, right? But you wonder, can they ever have serious profits if they're going to keep prices low? What we see is this other side business is generating so much profitability that it's actually able to give big Amazon, if you will, some real profit.
Okay, so let's go over to Alphabet Google now.
Yeah.
Tell us about what they reported.
So really strong results from Google. Advertisers are clearly directing their money at Facebook and at Google and away from other things. And we saw the bad results from Twitter this week. We saw strong results from Facebook. We see these very strong results from Google. Google's having really terrific success, lots of ads and lots of clicks. So they give us these two metrics that are very interesting. One is how much people are clicking on ads. And the other is how much people are paying for ads. And they don't tell us how much people are paying, but they tell us how much the payments are improving or worsening. Yeah,
there it is, the click growth, which you can see it going down. This is the number of clicks.
Right.
The growth rate, it's going up overall, but the growth rate is coming down.
23% is super strong.
Very strong. But
worse than it's been the last 2
how
quarters.
much are they getting paid for it?
So how much are they getting paid for it? Less.
Yes.
So the price per click has been declining dramatically, and that's because of two things. One thing is they've just added some new types of ads, which they are less cost, but the advertisers wanted them so badly, they're like, forget it, we'll just sell these things, even if it's lower cost, because the advertisers want it so bad, much more, and that's why you saw those clicks going up. But what you also see here is the value of a click declining because of the switch from desktop to mobile. Google has told us for years that that's going to start to slow down, but it hasn't. And it's I won't say it's worrisome, but it's something to keep an eye on for Google. This is a year-over-year number. I think that's the right way to look at it because we're talking about advertising, which is so seasonal. But the value of an ad on a phone is less than the value of an ad on a desktop. But more and more people, most people consume internet ads and internet everything on mobile. And so that trend has not been friendly to Google, but nonetheless they've had so many clicks on ads. And marketers so clearly want to go towards Google with their ads because the users of Google show intent by going to Google to search for something. They know who those people are so well with all that data. As a result, Google put up some really strong numbers last night.